now to spotlight the state of the tech trade. Joining us now for that is Cory Johnson, Chief Market Strategist, the Futurum Group, and host of the Drill Down podcast. All right, let's start out broadly.
Okay.
And just talk about your thoughts overall on the cut of 50 basis points, because that caught a lot of people by surprise. There were few who, predicted that, but most didn't.
They seem to hinted at a lot. It was actually interesting to watch the coverage of the Wall Street Journal. They nailed this, and they were, and you wondered if the Fed was whispering in the ears of the reporters at the Journal, because they did seem to have this. And I thought that Powell's speech yesterday was really adept at not worrying us about the economy, but kind of doing everything but declaring, mission accomplished with inflation, and saying, we kept rates high to beat back inflation. Inflation has now been conquered. Hail on, strong economy, strong employment, low inflation, GDP growth, job growth, everything's glorious according to the Fed right now. But I think the most important thing is not the 50 basis points, but the direction. And we've seen the direction with the anticipation of this with rates. I mean, mortgage rates are down. My goodness, have been coming down since November of last year. And I think we've seen this coming, but I think this is further proof that numbers are going to keep going up and rates are going to keep coming down.
It's interesting that you noticed the buoyancy of the press conference in the last one as well. It seemed to be some of that buoyancy as well. I think it was in Jackson Hole where there was some buoyancy there, and it's interesting seeing a different Fed chair than we've previously seen with Powell, just more buoyant in general.
Well, and sharing more. It's not enough. We always want more. But sharing more. I'm not a huge fan of the dot plot, but all the information we get from the Fed now really helps us know what's going to happen before it happens here. And we could see this coming.
Okay. We could see that there was a cut coming, but I do think there was divergence on how much that cut would be. There was even dissension within the ranks. I mean, Bowman was calling for a 25 basis point rate cut. But let's table that and just talk about what this means for the tech sector in general. We've been looking for some broadening out in the market besides the big tech players. What does this tell you now about the state of the tech landscape?
Well, I think we see a real shift happening in investor dollars going beyond the sort of Mag 7 and looking at other companies, both big companies, and full disclosure, I own Oracle shares. We cover Oracle as well. You've seen a fantastic move in Oracle.
Yeah, absolutely.
I've got 3 kids in college. This is good news for the Johnson family. It was not that good of a move, but it's been a good move. But a fantastic move in that stock. But that's also an AI play, and I think that what you see is companies spending lots of money on AI, and investors are starting to figure out that goes beyond sort of the chip giants, Nvidia, and again the Mag 7.
Do you think then that the beneficiaries will continue to just be those who have the greatest growth within AI?
So what we've seen is the growth has been stutter-stepped, if you will, and not everyone's growing super fast. And while there's a lot of excitement, and I talk to a lot of customers, I meet with a lot of CEOs, and they talk about the activity, but we're not seeing it all the time in the revenues. You looked at Adobe's recent quarter that didn't see explosive AI growth, even though they've been talking about AI nonstop for well over a year. And I think that we're going to see a broadening of the tech trade. And even when we look at infrastructure, when we look at the things that are going into building out data centers, we're seeing big growth in companies beyond Nvidia. We're seeing companies like some of the networking companies. I own shares of a company called Coherent. Again, I'm not giving stock advice.
Right, that's understood.
But I'm excited about what's going on in this world and the way that they're wiring these systems together, the way that they're managing data in these systems. Private companies like Vast Data. I had dinner with the CEO last week, and they're doing tons and tons of business. This is a private company that's been valued at $9 billion. And is doing so much business managing massive amounts of data in data centers that they don't even talk to clients unless they've got a petabyte of data or more, and yet they've got their clients coming out of their ears. So it's really busy in the AI world.
So in the AI world, things are really busy. When you think about where VC capital is being deployed, where are you seeing or hearing about it being deployed? Is it all about the tech sector?
Well, I'm based in San Francisco, right? So I see a lot of tech things going on there, but one of the things that amazes me is how many new chip companies there are. There are dozens of new semiconductor companies launching in the Bay Area right now, talking about creating new ways to create chips to manage AI. And whether it's data center workhorses or managing smaller language models or data on the edge, there are a lot of startups in semiconductors focused on AI. It's a really interesting time. I've never seen this before in technology.
So I was at a VC summit recently, and there was obviously a lot of talk about tech, but there was an interesting group that I saw that was getting some capital directed toward that. That was the consumer product space. I found that very interesting. But do you think that, kind of where capital is going within the next, we'll say 18 months, is that more limited to tech from your point of view?
So I think what's happening, one of the things we've seen with technology is really interesting to me is technology has gotten sort of, over the last, call it 20 years, gone from the bottom of the stack, which is disk drives and semiconductors and operating systems and computers and software, to the application layer, where people like us are using Uber and Instagram,
right.
and the apps that we use are on the top layer. But now we're all the way back to the bottom with the rewiring of chips for AI. And I think you're going to see a similar progression where you're going to go up the stack into software, AI-focused software, and we see that, as I mentioned, Oracle and other companies seeing a big explosion. We're going to see new companies dealing with software on the AI level, and eventually it's going to show up to the consumer. We're already seeing that with some of the new things that have been announced but not in our phones yet with Apple.
Right, because even in the consumer products space, you're seeing an integration of technology as well. That's one of the things I noticed, that you can't just be a product. You have to have some kind of technology or innovation within that.
Everything is tech. Everything is tech. So, we see it everywhere.
In modern day as well. What do you think this does to, kind of the landscape when it comes to deal making, when it comes to M&A activity?
So the lowered rates are certainly going to advance the activity in the M&A sector, and the investment bankers are very happy about this because it allows companies to borrow more money to make deals happen. The other thing that's happening, though, is I think expectations are being raised for growth for a lot of companies. So the companies that don't exhibit the growth that they keep talking about, especially when they're talking about AI, those stocks are going to fall dramatically. And those will be some deals if there's any real technology or anything to be bought there, and I think that's where we're going to see deals. I spent a bunch of time yesterday working on some screens to try to find, looking for shorts, trying to find some companies that are fake AI.
Right.
Companies where they've started using the phrase artificial intelligence and machine learning, actually running screens, comparing 2000, I won't give away all my ideas, so there's want to be short sellers out there, but looking at companies that were around in 2020 that never mentioned machine learning, artificial intelligence, and are now mentioning it more than 10 times in their SEC filings. And I'm running screens against those companies to look for fake AI, but those are the companies that are going to get blown up eventually.
When you talk about the expectations being raised for growth, we really noticed that, especially with this last earnings cycle, right? If you didn't, or the past couple cycles has to be a beat and a raise, right? Or even if there's a raise, it has to be, a bigger raise.
Right.
Are those expectations is that just too much, or is that runaway expectations?
Well, look, it's appropriate to look at companies when the few times they let us see what's really going on, which is when they have their quarter filings and can actually do the math and see what's going on in their income statements, their balance statements, and God forbid, the cash flow statement. But I think that over time, we're seeing a big change in direction. I spent a lot of time looking at semiconductors, and we've just seen a real hard turn off the bottom in semiconductors. And 1 or 2 quarters might come in weird, and you're going to see some companies with big screw-ups like we've seen with Intel, or you're going to see other companies that are just doing wonderfully. But I think the direction is really impressive across the board in semiconductors. And if you can sort of back away from an individual quarter, you can see a real move, including for companies like Intel.
All right. I know we'll put a pin in that one. You nailed that one. All right, Cory Johnson, Chief Market Strategist, the Futurum Group. Thank you, Cory, for joining us.